Hey everyone, welcome back to Corporate Decoder. Today BYNO just filed an 8K and I am seeing one extension that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. This company is buying more time to find a partner and that extension means they are still searching. Alright, let's dive into the latest filing from BYNORDIC Acquisition Corporation. Commonly known by it is ticker BYNO. This is a current report, essentially an update on significant events. The most important date here is May 7, 2026. This is when the key event that triggered this filing actually happened. So who is BYNO? They are a special purpose acquisition company, often called a SPAC. Think of them as a blank check company created solely to raise money through an IPO and then use that money to acquire another business. They have a deadline to find a target company to merge with, and if they do not find one, the money typically goes back to the investors. Now, the main reason for this filing is an extension for their business combination period. Essentially, BYNO has been given more time to complete its acquisition of another company. This deadline was extended from May 12, 2026 to the 12th of June, 2026. To get this extra month, the company had to put more money into their trust account. They deposited $17,470. This shows they are serious about finding a deal, but also that they really need this time. Think about it this way. SPACs have a limited time, usually 18 to 24 months, to find a company to buy. If they run out of time, the investors get their money back. For BYNO, this extension means they are still in that search phase, and they are using their resources to buy more time. Let us talk about what BYNO actually is for investors. Their units are made up of 1 share of common stock and half of a redeemable warrant. They also have class of common stock with a very small par value, which is basically the nominal value printed on the stock certificate. And then there are the redeemable warrants. These give the holder the right to buy a share of common stock at a specific price, in this case $11.5 per S-share, before the warrant expires. BYNO is also identifying itself as an emerging growth company. This means they can take advantage of certain relaxed reporting requirements, which is common for newer or smaller companies. They have elected not to use the extended transition period for new accounting standards, meaning they will adopt them as they come out, just like larger companies. Looking at the news, one headline from Stock Titan on May 8. 2026 even mentions this 10th BYNO SPAC extension. This tells us that extensions for this particular SPAC are not new, and they have been using this strategy to buy time for quite a while. It also signals that finding a suitable acquisition target has been a challenge. This situation is not unique. Many SPACs have found it difficult to close deals in recent years due to market conditions and increased scrutiny. We saw companies like BYNORDIC Acquisition Corporation in April announce extensions, and this filing is just another step in that ongoing process. So what does this mean for investors? On one hand, the company is actively working to find a deal and has shown a commitment to moving forward by funding this extension. The $17,470 deposit, while not a huge amount in the grand scheme of SPACs, signifies their willingness to spend to get more time. On the other hand, repeated extensions can sometimes be a red flag. It suggests that the company might be struggling to find an attractive acquisition target or negotiate favorable terms. It could mean the available targets are not a good fit, or perhaps the valuation expectations are too high from either side. This is also why we see mentions of sponsor promissory notes, like the one from Stock Titan on May 4, 2026. Indicating the sponsors are directly supporting the company financially. This is often done to show commitment and to help fund extensions and operations while the search continues. For BYNO, the clock is ticking. They have until the 12th of June 2026 to announce a definitive agreement for a business combination. If they fail to do so by then, the SPAC will likely need to liquidate, and the funds held in trust would be returned to the shareholders. Historically, many SPACs that go through multiple extensions do not end up finding a great deal, or the deals they do find lead to significant value destruction for shareholders post. Merger, for instance. Many SPACs that delist after a merger see their stock price drop significantly, sometimes by 70 to 90% in the year following the combination for smaller companies. It is a tough environment for these vehicles. The risk for BYNO is that continuing to extend might just prolong the inevitable if a suitable deal cannot be found. Investors are essentially betting that management can pull a rabbit out of the hat in this short time frame. What I am actually looking for is a clear announcement of a merger target. That would be the next big catalyst for this company. Until then, it remains a holding pattern with the pressure intensifying as the June deadline approaches. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.